GST is a major indirect tax reform initiative India has taken since independence. Before GST is introduced, India's constitution is required to be amended to provide an enabling provision for the union government. The NDA government has introduced GST Bill in the Lok Sabha and the same was approved on May 6 this year. But it got stuck in the Rajya Sabha as the NDA does not enjoy majority there. Predictably, it was referred to the Select Committee, which recently tabled its report, and the Union Cabinet has quickly accepted the same and approved the necessary amendments in the bill. What roadmap lies ahead for this bill? To know the same, let me take you to our panel of experts from the industry, the revenue, and the consulting backgrounds.
Hello and welcome to Simply inTAXicating. Unlike several other taxes worldwide, the GST happens to be the first tax which was actually mooted for the first time by a German businessman in the early 1920s, later picked up by a French taxman and introduced in 1954. And today it has taken long strides, almost 60 years, and accounts for about 20% of the global tax revenue. Coming back to India, the GST bill, which was passed by the Lok Sabha, later referred to the Select Committee by the Rajya Sabha, and finally the Select Committee report tabled in the House and Union Cabinet quickly taking a decision to accept major recommendations. Of course, for some of the viewers, it may appear that GST has been reduced to a political toy. Keeping aside the political differences between the ruling party and the opposition, today we are going to touch upon the key recommendations, the future roadmap, and some of the contentious points. So we have three distinguished domain experts with us. We have Mr. Sumit Majumder, TIOL Consulting Editor, and also former Chairman, Central Board of Excise and Customs, who made representations before the Select Committee. We have Mr. Sant Kumar Verma, Taxation Head, Schneider. We have Pratik Jain from KPMG. He also made representations before the committee. He's going to share his personal experience on some of the future roadmap, the constituents of the future roadmap. So let me start with, sir, you tell us briefly about, you made the representations, you had some expectations when the committee was announced, and now you have the final report. So the key recommendations of the committee is also available with us. So you share with us to what extent you are happy looking at the recommendations.
I start with the most controversial one, that 1% extra tax. So on that, I am happy that at least the definition of supply they have suggested, and that will be there in the rules or law, whatever which they will do subsequently, not in the constitution. They will define supply, and there they will say that it will not for this purpose, for the purpose of 1% duty, that it will have to be supplied with a consideration, which means in one stroke you are sorting out the problem of stock transfer. That details later, because it would have been a terrible thing, because the cumulative effect would have been too much and entire logistics would have been at haywire out there. So that I am satisfied.
But sir, how necessary is this compromise?
Absolutely, there is a point I have also been making, that compensation is already there, that whatever loss is there will be compensated. But why again to put that on that? I believe the idea is that the central sales tax, the CST which they are getting now they are getting 2%. So straight away the optics would be better for those, they are calling manufacturing states, but actually it will for all states. Even those who are supplying raw materials also will take advantage of that. So I think to that extent, the interstate, they will be getting that CST portion will remain 2%, 1%. I only hope all the other mechanisms of the CST, wherever I have gone on GST conference seminar addressing the people, trade and industry, the first thing they ask, CST, whether CST will remain or it will go. So if other things that they control the way CST is collected, it will be totally against the concept of common economic market. So I only hope that is not there.
When I look at it, so this 1%, if we read it otherwise, we find that this 1% which is to be theoretically retained by the exporting state on interstate trade of goods, actually that is not for them, it is for the center. They are trying to reduce their own compensation package by 1%.
Yeah, to that extent, yes, you're right, absolutely right. So, Centre also would have thought that by doing this, I will have to compensate less. But I have another take on this. Perhaps we will later go into details on that. The compensation also, but since you raised it, I feel, this is my personal belief, that there will be so much of tax buoyancy after 2 to 3 years. It will take first 1 or 2 years in settling down, it will take some time. So much of tax buoyancy, there won't be that much of loss by the states. Automatically, a compensation amount will also come. That's why the Centre was not agreeing to putting it in the constitution from the very beginning. But compromise had to be done by Mr. Jaitley when he was negotiating. That was no for the states. And even your standing committee in 115th Amendment Bill, they also suggested better to raise the comfort level of the states, you give this, put it in the constitution. So I feel that after 3 years, it will not be an issue at all.
Mr. Pratik, what is your view on this? These two contentious issues.
I think I'm kind of disappointed with 1%. Of course, stock transfer not getting taxed is a relief. But 1% major disappointment is because GST was seen as a big opportunity for the industry to revamp the entire business. Look at the supply chain, reduce the number of warehouses or the stock points that you have. Look at consolidating your vendors. By doing this 1%, you are still asking the industry to look at tax while doing business. So, for example, if I have a factory in Haryana, I will buy from vendors who are located in Haryana because I don't have to pay 1%. Yeah. Similarly, on stock transfer, 1% does not apply. That would mean that once I manufacture, there is still an incentive for me to stock transfer and not directly sell. So, all of these things will still lead to distortions of supply chain. And the major objective of GST was to remove those distortions. So, I think we should still push for this. The other thing is, even suppose 1% has to survive, there should at least be a clause to say that it is only there for 2 years. Now, there is a clause, but then it is left to the GST Council to extend it further. So, theoretically, the 2% or 1% rather can be there forever. So, at least have this clause that if 2 years, 3 years, whatever time limit you want to put, that after that, this 1% will necessarily go. So, I think 1% still needs to be looked at, but this clause is much better than what it was earlier.
Right, correct.
And therefore does provide relief to the industry, but not to the extent that they wanted.
More needs to be done.
Absolutely.
Yeah, Mr. Sant Kumar Verma, please tell us, what is the industry take on this? How happy is the industry about it, or only partly happy and more needs to be done? How do you look at this?
In my views, when it comes to industry, I think Select Committee was one step which was kind of introduced 2 months back, which was not there in the horizon earlier. So we had our set of issues arising out of the draft constitutional amendment, and this was one of the key issues from the industry side, that this 1% is regressive. It doesn't fit well in the GST scheme, as Pratik also just highlighted the point. So the whole concept of ease of doing business, creating a holistic countrywide market, allowing free flow of material from one corner to the other corner, this doesn't gel well with that objective. Right. So, and if the time period, which is, though in the constitutional amendment it says 2 years, but it keeps it open, if it remains open for a longer period, and if the GST Council keeps increasing that period, so effectively we are saying that the CST will continue for a longer period with a reduced 1%. Right. So, which is kind of a distortion. So, not a happy situation to be in from the industry point of view. But I think the relief that stock transfer is not to be taxed. I guess, I think in my understanding, you have maybe 80-90% of the transfers from one state to the other state are of the nature of stock transfer. So, if that is out, I think I would say that's a welcome relief.
So, what do you suggest? This 1%, as rightly pointed out both of them, that it should not be open-ended. Somewhere we have to cap it. Why not to cap it at 5%, because you are giving compensation for 5 years? Let's not make it, and there should be a compromise.
You mean 5 years? Keep it for 5 years.
They say that for 2 years it will continue, and after the GST Council will decide. Why to leave it to GST Council? Again, sir, it will be a bundle of politicians. They will come up with this suggestion that let's extend it for another 3 years or 4 years or 5 years.
Right.
So, in Constitution Amendment Bill itself, let's plug that opening, so the loophole. 5 years it is locked.
But I think, you see, you were absolutely right. I think all of us will agree that they should have been capped at 2 years, 2 years, that's all. Like that compensation, as you said, they've said 5 years and that's all. But now it has not happened, and as you know, only the constitutional amendment, the cabinet committee also met for the fresh bill to be made on the basis of recommendations. This is not there. But the other thing, other points where I was satisfied in certain points and certain points I was not satisfied. One is that issue I had also raised before the committee, is that this public perception is that the band, the variation in the tax for the state GST, it will be a narrow one, but there is nowhere written narrow one. So they should define the band. I made this, and that they put it for the states. But again, they just say the band will be defined. Definition of band they have given. Again, what would be the width of that band? That has not been decided. I would think that it should not be plus 0.5, minus 0.5, 1% maximum. I tell you the danger. The danger is that because of which the center was not agreeing to this, because all of us were talking about common economic market. And in common economic market, we should have the same type of taxes everywhere. What Mr. Pratik Jain was saying just like before, that again there will be discussion, a businessman, when you decide where you have an industry or how will you do it, it is based basically on the availability of resources and or the proximity to the resources or proximity to the market. But now, what is happening now, they are seeing which state is giving me less rate of duty. That we wanted to do away with. But as is rightly pointed out, by keeping that 1%, you are again doing that. People will do it like that. The stock transfer you have removed, so they will go for that. In the same state, it will not happen. Similarly, band also, we thought that if we put, then again, and another thing, if you see that one state does it, say 1%, suppose the band up to 1%, he increases. Now say that rate of duty is 20%, GST, 10%, 10%. Now do you think that one state only it will remain? All other states will put it. So your rate will be increased by 1%. So your GST rate will become 21%.
Yeah, so I mean, the band is again welcome. I think not doing a band was not an option clearly for them because the states were insisting on that. Band definition helps us. Ideally, I have a slightly differing view. I don't think it will be plus 0.5 and minus 0.5. I'll be happy even if the band is not more than 2%. And my understanding of the band is that the states will be allowed to increase the rate beyond the floor rate, but not reduce. So the floor rate is determined as 10% SGST. They can make perhaps 11%, but not 9%. That's my understanding. And if the band is within, of course, that should be as narrow as possible, but I am expecting the band to be not beyond 2%. But that band must be defined. I mean, in the
so boundary walls have to be clearly defined.
Because the experience of VAT suggests that if it is left to states, then it will just go all over the place.
Absolutely. What is the industry's expectation of this band and the floor rate?
See, industry's expectation is that there should be certainty on the rates. So I think that's the expectation, and I kind of agree with both the distinguished panelists here that there has to be a range bound, or there has to be a limit on this range. It should not go erratically very high, and state should not be allowed to take it from say 10% to 15%.
But what is happening today in case of VAT, for instance? The same history will be
started
repeated,
with like the
Delhi started saying that Haryana has hiked it like this. I am also hiking it. I am making it like that. So similarly, the similar problem will happen.
So perfect example is that every state in 2005 started with 4% and 12.5%. 12.5% was the RNR. Today, there is hardly any state we can count on our fingers out of 29 which follows 12.5. Everybody is on 13.5 or 14 or like that, and 4 has already moved to 5. So, and this is, if you look at percentage wise, from 4 to 5 is 25% jump. This is huge.
So we will go back to the petroleum, alcohol.
Yeah, petroleum again. I'll take what Pratik had said some time back. That don't keep things open-ended. Now it's a very great thing that the petroleum has been constitutionally brought in. But then again, you have left it to the GST Council to decide the date from it. Having left it for the GST Council, they should have put a date. By that time they will decide it. Here again, one doesn't know how long it will go on. There is no date given, no year given. By this time so I would have expected, even if you read the report, you will find some experts have also pointed out, and it is recorded, that they've pointed out that you please put an outer limit beyond, but that has not been done.
Why is it so the politicians they don't like certainty in life?
No. I don't, again, no.
Because this is all about certainty.
No. It is as simple as that the states they don't want, because there is a reason. Why the states. My figure may be slightly here and there, but to some extent it should be correct. About 45 to 50% of the state VAT collection comes from petroleum and petroleum products. And in petroleum also, your actually duty will not go up, because it's not that suddenly your petroleum duty will come down.
What
GST
will be the
rate,
component of the credit, because petroleum is out of it, the seamless credit chain. So, because again for the industry also, sir, the petroleum is a major component.
If you ask me, I think I'm leaving aside the petroleum point here. If you talk about credit, I think credit is the biggest pain for industry today. I think India could be one of the countries in the entire world with such a massive economy, sizable economy, where you have so many filters and prohibitions, restrictions. I think beyond a point, experts like Pratik or me would also struggle to devise a very robust system in any industry that this is the 100% perfect system that the credit, how the credit should be taken. I think it's really, it's a huge problem. I think most of the litigation on indirect tax side that we have today, I think maybe 70% of them are on credits, whether it is VAT credit under the state VAT, or it is SENVAT credit, the central excise or service tax. I think we need to just simplify. I have been personally saying this, and many in industry have been saying this. As long as there is an expenditure on purchase of goods or services, it's in relation to business, why should there be filters around it? You just allow credit, make life simple.
And it's not as if people have not done it. If you look at Maharashtra VAT law, it says that anything which is debited, any expense which is debited to the P&L, you will get a credit of that. And that is the concept of GST. Today, for example, if I get a factory constructed, okay, and use it for manufacturing, whatever service tax I paid on construction, I don't get any SENVAT credit of that. I mean, that is highly inflationary. On petroleum, I think today also industry doesn't get any SENVAT. So petroleum per se, to my mind, is not an issue too much for industry. I think the issue for petroleum is more for the petroleum sector. For example, if I'm a refinery, when I'm manufacturing petroleum products, I have to pay existing taxes, excise and VAT, etc. But whatever inputs I have, whether it is in form of capital equipment or raw material, etc., on which I'm paying GST. So how will I claim that set off of GST against existing taxes is not clear to me. Today, at least they get that set off. Right. So and second point in petroleum is I see absolutely no logic of bringing natural gas within the definition of petroleum products, because natural gas, if you compare with coal, because coal is a fuel which is within GST, natural gas is not. Natural gas is a clean fuel, and you can't equate natural gas with petrol and diesel, to my mind.
So petroleum, after petroleum.
After petroleum, there are two sin goods. One is tobacco, other is alcohol. These are known as demerit goods or sin goods. Now, one demerit goods, tobacco, we have put it in the GST. And the idea is that the GST rate will be there. In addition, central excise duty will be there. Alcohol may be a sin goods, but the items which go into production of the alcohol, they are not sin goods. But they will also be hit by the same credit gap. And so they could have, states could have agreed and brought it under GST and have their excise duty and state VAT separately, so that their revenue levels remains. B, even if this is not acceptable, I had given a second alternative, that if you do not want to equate it with tobacco, at least equate it with petroleum. Like you bring it within the constitution, so that in future, you don't have to go for constitutional amendment constitutional amendment.
Alcohol, interestingly, sir, alcohol happens to be the only sector in the economy which is already, it's a consumption-based tax. They are following the same method. So GST is already there for them.
No, but
the manufacturer here.
Okay, that's all right. Then it has to be in.
That is, I understand. So constitutionally speaking, but I am saying that it was like a step, into it. That's all. They don't have to do anything. A unit in Haryana sending the consignment to Tamil Nadu, and there is a buyer there. Tax has to be paid there. But the only thing is,
so you're talking maybe about state excise, but then you have CST component also.
Yes, CST component is there.
So therefore, in that sense, there is a mix of origin and
yes, that component will be there. Yeah, absolutely. So, but sir, from that perspective, the GST should be welcomed by the entire industry. I'm sure the industry must be welcoming it, sir.
Which
or
one?
they are not. GST industry. I mean, sorry, the liquor industry.
Of course, they want GST.
They want.
In
fact, they've been advocating with the government for a long time.
Surely, logically, they
I
should
know,
be
but
welcoming.
Mr. Verma has already explained. There is a point.
Coming back to that 1%, I think one other thing which we also discussed with Select Committee was that why don't you don't have this 1%, increase the GST rate by 1%. That's a CGST rate, instead of 10, make it 11. And keep this 1% separate fund, and you keep compensating from that. So at least, that will not pinch the industry, and that will not impact the supply chain.
Welcome suggestion.
Yeah, exactly.
So, yeah. In my views, I think this should iron out the troubles and the compliance costs, as you rightly mentioned.
And the cost in the industry is nothing but the tax rate. Why don't you increase your tax rate, reduce the compliance cost?
One thing which I noticed from the response of the Revenue Department, they have said that tobacco and luxury goods will be taxed at a higher rate. And I, maybe for tobacco, I mean, you can still understand. Now, what is luxury goods is something which is difficult for me to understand. So, will they say that, okay, high-end cars, for example, luxury good, or air conditioner luxury good, or a soft drink is a luxury good? I think some of these distortions, and I think there was a comment by the committee that multiplicity of rate should be avoided. And in that context, that comment from the Revenue Department to say the luxury goods will be at a higher rate.
So that brings us to the GST net.
Recently, I heard the CEO of GST and speaking in one of the industry conferences, and he mentioned that that they're going on schedule, and they have floated an RFP for selection of a vendor. By this month end, it should be decided. He also mentioned that on the back end, while there will be a front end portal, on the back end processing of data, they have given a choice to the states that if you want, you can do it yourself, or you can have GST and do it for you. He said 13 states have already agreed, opted for this. But he was also concerned about the remaining states, because he said that remaining states who have not opted for that, whether they will be ready for you to, because that portal will be used to give the data or file the return. After that, there will be data, the data has to be processed.
Yes.
And that processing ideally should be done by GSTN on behalf of all the states, but it has been left to the states. So only 13 states have agreed to that. So I think IT preparedness to that extent is
that may turn out to be a quicksand for the GST rollout.
Yeah, but many other things. You see, one good thing I found, another good thing. Sorry, yeah. One good thing I found in the report, they've acknowledged that the present status still miles to go, if not more, because they've acknowledged that the threshold, the things which are yet to be decided, threshold, whether it will be 25 lakhs or 10 lakhs, yet to be decided. The rates, of course, yet to be decided. Then many other things, the exemptions, number of the list of exemptions yet to be decided, and items which should be there, which will not be there. All those things taken together will decide about the structure. Place of supply rules. Now, this is, I have been saying, the place of supply rules is the keystone in the structure of GST, because the whole complication of GST comes out of the interstate movement of goods. And there, the place of supply rules is very important, particularly with reference to the services. Now, this must be given to our taxpayers, particularly service taxpayers, and they should apply their mind, tell them that this is not correct, this is correct, and you have to do it this way. Where is the time for all this exercise?
I think perhaps they miss a trick, because I think, why do we need to wait for the constitutional amendment bill to pass,
it should be put in
for this draft laws to come out? So whenever you interact with finance ministry officials, they say, okay, we will give the draft law in public domain, and that too will come in tranches, place supply rules will come separately, etc. And that for the bill, because if you already have it ready, give it to the industry, at least for preparedness. It is
Absolutely. So anyway, I mean,
This is a huge cause of concern, whether it is, so we have many moving pieces around here. One is the GST and backbone network, whether industry is aware of this and whether the states are aware of this, because you have again three key stakeholders: the state government, the state tax enforcement agency, the union tax enforcement agencies, as well as the taxpayers. So these are three important stakeholders. Are they aware of all of these moving pieces and what certainty they have, how much they know? The draft laws, the place of supply rules, the rates, the exemption threshold, the registration threshold, and the IT backbone. So we have everything is like it's fluid at this point in time.
Absolutely.
So, and I know I agree with Pratik that to the extent things are available, there is no harm in putting them in public domain for at least awareness, if not for seeking feedback, but let people be aware.
So let's go back to the final round where I would like to start with Mr. Pratik. What should be the roadmap from here now?
Before I come to the roadmap, I have a couple of points to make. I'm sorry for this.
Yeah, please.
Is that a couple of things which I think we represented and we thought it didn't happen. One was that the central government still has powers to impose this cesses and surcharges kind of things. Okay, and the understanding all along, right from the discussion paper in 2009, was that all these cesses and surcharges will go. So that power, what will happen to that, and things like automobile cess and NCCD and research and development cess, and so that's something which we were expecting to go. The other thing was that on definition of service and goods, we were saying that why do you need to define services here, because they have defined services as anything other than goods. So the power of imposing cess has been retained, and that is a major cause of concern to the industry, because the initial understanding was all the cesses and surcharges will go. Particularly encouraged with the fact that in last budget, the education cess has been done away with.
So on this note, let me thank all my panelists for contributing to this, the construction of a roadmap for the GST. As Mr. Verma rightly suggested, that we are on the brink of a major historic jump into a new ocean of indirect taxation, where a lot of relief is expected. Tax system perhaps is going to be much more simplified, harmonized. The seamless credit system is going to be in place. A lot depends on the Rajya Sabha now, how they are going to treat this GST bill. But the one thing which remains is that a lot needs to be done. Some of those points like cesses, for instance, some of the clarification with respect to the definition, perhaps if it could be taken care of, if not now, maybe later. But the other dimensions where, of course, supply rules, etc., and making things public for feedback, of course, 4 months period is certainly not enough. Industry should be given minimum 1 year to give their feedback, to get GST ready. Ultimately, it's very important that quite often the policymakers, our politicians, whatever we have done in the past, so far as building and designing and coming up with new tax system, we have never taken into account the compliance cost of the industry, which is nothing but a part of the tax rate. So this time it's a historic opportunity that the architecture which we have been following for designing new tax system, perhaps there is need for a change. We should be taken into account the industry. Industry ultimately goes hand in hand. Industry is the actual well-wisher and custodian of the interest of the exchequer. So we need to actually take care of our industry, pay them in the same coin. I am pretty sure they will be enriching the exchequer's kitty more, and in coming years, India will be much stronger economy with a much better tax system, and GST will certainly be, the entire country is looking forward to it, and I am sure the politicians will not disappoint us again. Thanking you all for watching TIOL Tube.